Margin debt on trading stocks is up 55%. That's a sign of some frothy toppiness in the market. Again, I'm not calling a top. We had a really rough last week. I think I mentioned the third Friday of every month is a very big options and futures expiration date every month. Hey, it's KP coming to you live from Corona, California. Sorry, it's not a Italian backdrop here, but got home late last night and ready to get back into the mix and trying to catch up on things. And unfortunately, the leadoff here is we have 18 servicemen and women that have given up their lives in the Iranian conflict. And so hats off to them in their service. And it's a reality of this war that we're in. It goes far beyond gas prices and mortgage interest rates and political differences. Humans can be evil. So unfortunately, there are some losses. Having said that, it is a light economic calendar week, and so we get into the news, and there's really not a whole lot to talk about. Fed blackout period. The meeting is next week. It will absolutely move markets. So what's moving markets this week? Well, a little bit of that blackout period. There's less communication as Fed Chair Warsh had said that, hey, he's not going to have people talking as much. And so the market doesn't have as much to chew on. So there's a little bit more uncertainty. And even with a good CPI and PPI print last week, it is one print. And so it's not enough for the bond traders, at least for now, to believe that it is the prevailing trend. And so we just need to wait for more data. And so there could be some choppiness in that period. Looking at the 10-year Treasury today, got up to 466, touching right around where it got back to on those May highs. This conflict has been interesting. The first week of March, for about 3 days, we had the lowest mortgage interest rates in 4 years, and then we've been on this little roller coaster. But I think the consumer psyche is like, hey, this is what it is. And so I delayed my spring purchase. It's now time to go out and buy. And we're actually seeing some pretty heavy lock activity, considering that it is July and there are elevated rates. The lock activity is better than June, which was better than May. And I think generally that's pretty good. Non-QM continues to rise as there are less refinance opportunities. I think originators tend to focus on their time where they can find deals. And so you work in the non-QM space or DSCR or construction space. And I think what happens is originators start to build that into being a normal part of their base. I think I mentioned on a video about a month ago, I talked to our fearless leader over at NAM, and we had a conversation with Kimber White, basically about how 45% of his business is currently non-QM. And so he's made it a base of his business. And I think that's something that kind of works in these times that people start to, transition. And so it's a great space. We offer it here, obviously, at PRMG, non-QM products, and there's so many great lenders out there. The issuance for MBS, basically non-QM, non-conforming mortgages, private label securities, if you will, they were actually down just a little bit in the second quarter from the first quarter. But remember, the first quarter was a really busy quarter. So I think overall this will be a growth year for non-QM. And so don't sleep on that. So Fed meeting next week. Housing starts kind of ticked up, mostly because of multifamily, which is good. It's earnings season. And so what are the earnings reports telling us about the state of the economy? This is something that I don't think I've ever heard anyone say, and I'm going to just kind of talk about it, coin it, discuss below. We've talked about rolling recessions that we've been in. We've had a rolling recession in housing and manufacturing. They've both mostly rebounded from recessionary levels. And then never really had a consumer-driven recession because we have this K-shaped economy. And so, boomers hold more than half of the net worth in our country, and they have not slowed down in spending. And so that's held up the consumer. But the lower half of that K, especially 50% and under in income earnings, they're struggling. and they're struggling. Gas prices, just exacerbate that. And so, could you have a rolling consumer recession? Is it something that starts with the lower K, and then if there was a stock market event? I'm not a financial advisor. I'm not responsible for your losses, only your profits. But if there was a drawdown, a bear market in the stock market, which we saw a year ago with the tariff fears, which ended up rolling off, just like the Fed said it would generally for inflation, especially looking at the last CPI report and other CPI reports. But most of this inflation right now is energy driven, most of it. And how long will that last? What will happen if Iran decides to start bombing, Saudi Arabia and Qatar's oil infrastructure, or if they just say, screw it, you can't have Cargo Island, we're going to blow the whole thing up. Some people just want to watch the world burn, and that regime is pretty much in line with that theory for the last 47 years. And so there could be more pain to come as military escalation continues. So we'll see if energy becomes more sticky. And anyway, earnings, Mag 7, Magnificent 7, Google reported today, Tesla reported today. Google smashed earnings. They absolutely smashed it. But it's very interesting. There's a corollary here to our industry and what companies are going through right now with their AI build and spend and infrastructure, along with Google or Tesla. So you make money, and then what do you decide to do with it? Do you invest in your future, right? It's kind of like playing Monopoly. You're playing Monopoly. You try and gobble up as many properties as you can on the board, and then you collect your rents from your houses and your hotels and whatever properties you own. And then, when the game's over, you count up the money and there's one winner. There's pretty much everyone, unless you went bankrupt, pretty much everyone has some amount of cash at the end of the game. And so there are multiple winners. Maybe someone went bankrupt and they're out, but there are multiple winners. It's not winner take all. So if you look at it like that, companies in our business are spending on AI right now, and they're thinking about how to piece all these things together. A lot of it has to do with your business model, has to do with your LOS that you're on. It has to do with, do you believe in AI? Is it too early? Or even, do you have the money to spend? And so I think, just as Google and Tesla, reported in their earnings today, how they're looking at capital expenditures, CapEx, if you haven't heard that yet. CapEx is obviously a very important thing for lenders and of course, brokers and correspondents as well. What are you going to spend your money on to make you future-proof? And I think that's the whole key here. So Google has decided to raise their capital expenditure, and it's been paying off. They're making more money in their Google Cloud, which has grown tremendously. Tesla had something like $28 billion in quarterly revenue, and they got like $5 billion in profit, and they just spent it, and they're putting it into factories to build Optimus robots and other things. I thought it was interesting the way it was read, the stock subscription service, which I'll share with you. Tesla rang the register for $28 billion in the second quarter revenue, up 26%, and then promptly set $5.8 billion of it on fire in capital expenditures, CapEx, torching the free cash flows to negative $1.1 billion, their first cash burn in 2 years. But full self-driving subscriptions are up to 1.5 million, 56% up year over year. They have a cybercab factory in Austin. They're creating terafab, so they have more compute and AI power. Their Oakland area, Hayward, I believe, is where Fremont plant. They're turning that into an Optimus robot factory. They killed the Model X RIP, which is the Tesla that I just paid off yesterday. I had a 26-cent final payment to pay it off. It felt good. I've had that for over 7 years. They no longer make that car. They said they over-engineered it. And they're going to get rid of that, and I believe the Model S as well, and build Optimus robots, which is the future. You wonder where all this AI spend for all these mega cap companies is going, where it's going for our businesses. I think for our business, it's still even hard to believe what AI is going to do. I had 3 demos today on stuff that'll blow your mind. It's unbelievable what's happening out there right now, the conversations. And so think about, humanoid robots everywhere, flying drone cars, helicopters. They're called eVTOLs, vertical takeoff and landing. Just so much stuff that we can't grasp yet, but it will come and it will change everything. Again, progress is not possible without change. By the way, Robotaxi just landed in Miami, Orlando, and Tampa. Margin debt on trading stocks is up 55%. That's a sign of some frothy toppiness in the market. Again, I'm not calling a top. We had a really rough last week. I think I mentioned the third Friday of every month is a very big options and futures expiration date every month. And so there's a lot of mean reversion that goes on from the market makers. And it crushed a lot of stocks. But then it rebounded this week, magically. Why? Because of what I just said, mostly some market mechanics. But then earnings is coming out. So are these companies making money? Are they showing that they're going to be future-proof? Are they being punished by not having as much profit because they're spending on their AI to build for the future in the short term, but then long term create, a longer future-proof company? I read From Good to Great many, many years ago. Shout out to Ramaj Bali, my first boss in the business. We read that, and there was a chapter about telling time versus building a clock. And so some of these companies are building clocks. Are you building a clock? So people with 55% margin, with margin debt up 55% year-over-year, they're telling time, and they got crushed last week. So World Cup is over. Old-fashioned rabbit. Just couple nuggets here, and then we'll wrap it up. The old-fashioned rabbit ear TV is still the fastest when you were watching the World Cup with a 3 to 8 second delay. Cable sends a signal through fiber networks with a delay of 5 to 12 seconds. Satellite TV goes to space and back, which, by the way, Elon answered a question about combining Tesla and SpaceX today. So there's like a 90% chance that'll happen. Satellite TV goes space and back with more encoding and processing, meaning a delay of about 15 to 30 seconds. Streaming splits the video into thousands of small file segments. Delays can reach 60 seconds or more. And speaking of speed, the men's world record has been broken for the mile after 27 years. My oldest is 13. She ran track for the first time. She spent about a month running track. She'd never done it. And I told her, I said, you run a sub 6 mile. She goes, no, I run under 6. I was like, sub 6, that means, anyway. So she ran a 5:56. British runner Josh Kerr ran a 3:42 and 66 yesterday at a meet in London a couple of days ago. I told her that, and she's like, whoa, he was cooking. Anyway, hope you'll have a good one. Just one video this week. I don't do this for likes. I don't do this for engagement. I do this to educate, to have a good select group of people that I've connected with. So talk down below if you waited 12 minutes to comment. Let's just keep it amongst ourselves. We're not trying to break any engagement records, although that would disappoint my 13-year-old TikToker. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.